The countdown to Budget 2025 has begun and the MSME sector is under the spotlight as NBFCs and Fintechs outline their wish list. From enhanced liquidity mechanisms to targeted co-lending reforms, the industry is urging the government to unlock credit access for small businesses. Here's a report.
Well, ahead of the Union Budget 2025, the focus on empowering India's MSME sector remains paramount. Non-banking financial companies, the NBFCs and fintech players are calling for enhanced liquidity, innovative mechanisms and policy-level changes to bridge the financing gap for the crucial enterprises. With MSMEs being a key driver of employment and economic growth, the stakes are high for the government to deliver targeted reforms. Here's what the industry leaders have to say.
In India, the MSME credit need to be expanded. That is also the government of India's objective. But somehow, the overall liquidity for NBFC, which are focused on priority sector, seems to be very negligible. So through this budget, if the government can provide certain mechanism to provide the liquidity, and mechanisms can be in form of guarantee schemes, in form of creating a refinancing institution, then the overall credit to MSME, the mission of taking the MSME financing to 3x would only be possible when the NBFCs which are doing good work in the sector are provided with sufficient liquidity.
Where the market is getting constrained is that the flow of capital to these fintech NBFCs is both high priced and constrained in quantity. Especially the last year's actions on unsecured lending risk weights has affected the industry negatively. In line with that, there are 2 or 3 steps that will help in ensuring flow of capital to MSMEs, especially the ones that are not getting served by the banking system. One is that the co-lending criteria of public sector banks towards MSME lending should be brought down to BBB family of NBFCs, because that is where most of the innovative new age NBFCs and fintechs are. Currently, public sector banks only partner with A-rated or better NBFCs, even though they get to exercise full credit control on these loans.
I think what we need from this budget is that a lot of this earmarked corpus has to be able to find its way through digital means. Because for many years, incumbent financial institutions haven't been able to deliver so much of this credit. It's only going to be the adoption of new age technology and fintechs like us that can really accelerate the reach of all of these schemes, a lot of the credit corpus that is available for boosting this MSME. And I think with that, the second thing as an industry, as Priority Sector Lending Association of India and a founding member, one more aspect that if MSME is our priority, then we also need better affordable and reduced rates. I think if we have to drive consumption and increase demand in our economy, the finance ministry really has to be able to have preferential or subsidized rates for MSME financing.
Well, the industry's message is loud and clear. Timely access to credit, reduced financing costs and collaboration between banks and innovative NBFCs will be critical to driving the government's MSME growth vision. Whether through guarantees, subsidized rates or tech-enabled frameworks, the upcoming budget has an opportunity to unlock the true potential of India's MSME sector. It is a fine balance of policy intent and implementation that the industry players are hoping for. In New Delhi, this is Shivani, Bazaz.
With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC-TV18.